Here's a number that should stop you cold. 15.3 million. That's how much Ethereum is left sitting on exchanges right now, the lowest in over 2 years. And ETH keeps leaving while the chart just sits there and sleeps. So here's the real question. If supply is quietly walking out the door, why is almost nobody talking about it? Today I'll show you the exact level that decides Ethereum's next quarter, and the trade hiding behind the trade. Ethereum is trading close to 1900 as I record this, and honestly, sentiment is about as flat as it gets. Everyone's bored. Bitcoin takes the headlines and major interest, the altcoin side feels dead, and most people have checked out of ETH. That's usually the exact moment worth paying attention to. Because underneath the boredom, something structural is happening that price hasn't caught up to yet. Two forces are pulling in opposite directions right now, and one of them has to win. Let me walk you through the fundamentals first, because once you see them, the chart makes a lot more sense. Let's start with supply, because that's where the story really lives. That 15.3 million ETH on exchanges is only half of it. Right now, 33% of all Ethereum is staked and locked away, an all-time high. 1 in every 3 coins is off the market. And it's getting tighter. The validator entry queue, the line of Ethereum waiting to get staked, holds around 2.6 million ETH with a 45-day wait just to get in. The exit queue? 0. Nobody's leaving. A 45-day line to lock your coins up and not a single person heading for the door. Now here's where it gets interesting, because the bears have a real point and I'm not going to hide from it. There's a story going around about the Robinhood chain. It pulled in around $816,000 in revenue, and Ethereum itself captured $1,538 of that. 0.15%. If you believe Ethereum is a revenue asset, that number is brutal. And it's not the only crack. Weekly active users on the base layer have slipped to 2.5 million, down from a peak at 4.7 million earlier this year. Core developers are down to 116, off from roughly 230. On paper, that looks like a chain losing steam. But here's what the retail read misses. Joseph Lubin, who co-founded Ethereum, answered this directly. Low fees on the base layer are deliberate. That's the whole design. The value was never meant to come from tolls. It comes from ETH getting locked away, supply shrinking, and net burning under heavy usage. The asset that secures trillions in settlement can't stay economically small forever. You don't price this like a toll road. You price it like collateral. And the collateral thesis is exactly where the institutions show up. JP Morgan has quietly tokenized around $870 million in assets across 2 funds, all on Ethereum. Morgan Stanley just filed an updated amendment for both an Ethereum and a Solana ETFs, with fees set at 0.14%. And that's late-stage paperwork, not a trial balloon. A group called ETH Systems just spun straight out of Ethereum's own privacy task force to sell confidential settlement to banks, backed by names like SharpLink and Lubin himself. The receipts back it up. Ethereum holds $14.8 billion in tokenized real-world assets, nearly 3 times BNB chain. Native ETH holders just crossed 321 million, second only to BNB. It carries $165 billion in stablecoins, almost 59% of every on-chain dollar. Total value locked is up 163%, and economic output is up 247%, even while speculative trading volume dropped 42%. A dying chain doesn't pull money in like that. The tourists left, and the real capital moved in. And with US producer inflation coming in at 5.5%, under the 6.2% forecast, the macro wind is finally shifting the right way. Now let's get into the charts, because this is where my plan lives. Starting with the weekly Ethereum USD in front of you, price is sitting right on the lower band of an ascending channel that's been respected since 2022, and it just bounced clean off the load zone. I won't sugarcoat it though. Ethereum is still trading below the 21 and 55 exponential moving averages and below the 200 simple moving average, that big green line. Structurally, that's not pretty yet. The bulls have work to do. But look lower, at the Heikin-Ashi Relative Strength Index. It's turning up out of oversold and printing a bullish divergence against price, which just means price made a lower low while momentum made a higher one. Early and not confirmed, But this is exactly the kind of quiet shift that tends to lead these reversals, before the obvious candle everyone else reacts to. Here's the key level, 1570. That's the June low, and it's acted as support and a liquidity pocket all the way back to 2021. If that was the bottom, here's the ladder I'm working with. I've anchored my Fibonacci from 2370 in April down to 1570 in June. First ceiling is 2000, the 0.618, then 2370. Above that, the extensions open up. 3000 at the 1618, then 4600, 5800, and 7000 at the 3618. And notice where the liquidation magnet sits, that heavy shelf of leverage around 2400, right in the 2370 pocket, pulling price toward it. So how do I trade this? I scale out, I never guess a top. At 2000, I trim 5%. At 2370, another 5%. Those first two are pure insurance, cash off the table in case this is another lower low and I'm wrong. At 3000, I trim 10%, then 15% at 4600, 20% at 5800, 25% at 7000, and I let a 10% runner ride. Everything above 3000 is where the real risk-adjusted return lives. The invalidation for short-term holders is simple: a decisive weekly close back below the channel base and 1570. My stop trails the whole way. First target hits, stop moves to entry. Second target, stop moves to target 1, and so on. The trade pays for itself as it climbs. Now the chart behind the chart. Ethereum against Bitcoin, weekly time frame. The 0.618 fib at 0.025 held the retracement of the entire April to September 2025 leg. Price wicked into it and buyers defended. It also just broke the top of a falling wedge, and it's testing the 21 exponential moving average now, with its own Heikin-Ashi relative strength index curling up from oversold. Confirmation is a second weekly close above the wedge. Invalidation is a close back below 0.0254, and if that level goes, we're looking at 0.018 again, and the whole thesis just takes longer. So let's zoom out and be honest about both sides. The bull case is a supply shock meeting real institutional demand, with the macro finally cooling. If 1570 holds and Ethereum against Bitcoin confirms that wedge break, the road toward 3000 and beyond opens up through 2026 into the first quarter of 2028. That's the higher probability read as I see it today. The bear case deserves respect too. If active users keep bleeding, the base layer keeps capturing nothing, and price loses 1570 on a weekly close, this was just another lower low and we reset. That's the exact risk those first two trims insure against. And while I wait, the yield is real on ETH pairs, averaging closer to 30% annualized over 30 days. Now, you may be asking, why Ethereum Bitcoin matters beyond Ethereum? Because this pair is the cleanest proxy for capital rotating out of Bitcoin and into everything else. Ethereum doesn't rally alone. If it breaks, the whole ETH ecosystem and altcoin side of your portfolio moves. That's the trade behind the trade. So here's the thesis in 3 sentences. Ethereum's supply is draining off exchanges and into staking, while institutions quietly build the rails, even as the base layer looks weak on the surface. The chart is coiled at 1570 with early momentum turning, and Ethereum-Bitcoin pair is the trigger that tells you when rotation actually begins. Respect the invalidation, scale out on the way up, and let the runner work. If this saved you some research time, hit like and subscribe. It really helps the channel. And if you want to see my exact execution in real time, that's what the Pro Capital Vault is for. Inside my Discord, through YouTube membership, I share my live portfolio, the precise buy and sell zones, weekly strategy calls, my Sunday prep report, and direct access to me. Just tap join below the video or scan the QR code on screen, sync your YouTube to Discord, and every private channel unlocks automatically. Quick question for the comments. Where is your line in the sand on Ethereum? And if you missed my latest breakdown, go watch that next. None of this is financial advice, just my read and how I'm positioning. Let the chart decide. See you tomorrow.